Welcome. If you're watching this, then you want financial freedom and you want to escape the matrix, as they say, just as much as I do and everyone else watching. Why do we say that? Because regardless of what country you're in, let's just focus on the United States, the currency of the United States, the US dollar at this time, is going down in value. So you're purchasing less with it. We all know this. Harder to put food on the table, harder to pay your bills, harder to even try to save for the future. They want to keep you poor. How can you get out of this system? What can you do? If currency is devaluing, and is devaluing in the US, and it's devaluing all over the place, and you'll see that other countries and other people are seeing the exact same thing happening. So when there's inflation and there's unbelievable amount of taxing, and taxing is going up and inflation's going up, then the value of your money is becoming less. There's two ways to take money from you. The government can tax you and literally take the dollars from you, or through inflation and through printing, let's call it printing of money, or just adding money to the money supply, that decreases the value. So they take money, they put more into the system, so they're spending with a deficit. In other words, the government is spending more than they're bringing in, so they're creating more money, and they're spreading it out among people. Maybe $1,000 to these people and $1,000 to these people, and then they're putting it back into the economy. Well, by doing that, it's devaluing your money. That's another way of taking your money, because it's worth less. So what do I do every Friday? We've been doing this since January. We talk about things that you can save as dollar alternatives, such as gold, silver, cryptocurrency, and other things. Ways to save your money in vehicles that aren't dollars, which are going down. And I'll get to that in a moment. But first, in two of these posts that I'll put up here regarding the United States, you can see that the U.S. is spending over $1 trillion, it's not funny, over $1 trillion a year just on interest expenses. In other words, not paying down the principal as we all think of principal and interest. And that was, in 2020, just 4 years ago, $584 billion. Now it's $1.1 trillion. It has doubled just the interest expense. 2008, it was $450 billion. So from 2008 to 2020, 12 years, it went from $450 billion to $550 billion. Just about $100 billion. Still a lot. But in the last 4 years, it's gone from $580 billion to $1.1 billion. Basically doubled. Do we think that's sustainable? I mean, just use our basic logic. Can you have interest payments of $1 trillion or more? Well, depending upon how much you're bringing in, possibly. But the math right now is no longer adding up. There's a problem. The second thing is, current administration wants to increase, or they just put out, and I've seen many articles, and here's a post, that they want to put capital gains, they want to raise the tax rates. Okay. Does that make sense? Are you having a hard time paying your bills? Are you having a hard time making ends meet? If all that's happening, does it make sense to then increase taxes? Of course not. It's like just another nail in the coffin. And this is also on what they call capital gains. So a lot of people think, oh, capital gains. Well, that's just for rich people. They invest in stocks. The stocks go up. They make some money. So they're paying taxes on that. Who cares? No, we all care. We all care because small businesses are what have made America so great. Even the Googles of the world started at one point as a small business. There was an investor who put seed money into that company. If the person didn't invest, they wouldn't have been able to create that company. Most companies, depending upon the goods or products or services, don't start out profitable right away. Someone has to invest. Why would you invest? Why would anyone invest in anything? Imagine if one of your family members came to you and said, hey, put some money into my company. You think, okay, well, is it going to make money? I mean, I don't just want to lose my money, right? Exactly. You don't want to lose your money. You want to know that you're going to get a return on your investment. The good thing is if you invest in something and you lose money, the government gives you and makes up for that. No, they don't. Of course not. If you lose money, that's on you. But if you make money, the government wants some. Okay, so we want people to be incentivized to invest in companies so those companies can get off the ground and grow and create jobs. We want to incentivize investment. If you start taxing that at unbelievable rates, In other words, to the point where there are better alternatives. Are you going to put your money in something that you're really not going to get a return on, or something that you are going to get a return on? Common sense. So the more we tax, the worse it's going to be. We need to tax less. We need to help the growth of the economy. So that's just what the federal government's doing. Now let's look at other countries. So in other words, that's going to decrease the value of the dollar even more. Now let's look at other countries and what they're doing. Here you can see China's central bank bought over 200 tons of gold last year. Over 200 tons of gold. So sure, they can make and print more of their own currency, but they're worried about currency in general and about nations' viability. They're buying gold. So if they're doing it, we should pay attention. That's tons. 1 ounce right now is around $2,400. So that's an alternative to a currency, gold and silver. They're considered stores of value. Let's talk about things crypto. Now you might think crypto is total baloney. You might not think it's baloney. You might think it's the best thing and it's the future. Regardless, money is going into it. There have been 11 spot Bitcoin ETFs, as you probably already know, and now Hong Kong is going to have a spot Bitcoin ETF and a spot ETF for Ethereum. Those are the 2 largest market cap cryptocurrencies. Generally speaking, Bitcoin is looked at as a store of value, like gold. Ethereum is considered to be the world's computer. A lot of transactions continually going up, people building on top of it. You name it, those 2 have essentially, let's just say, first mover advantage. But they are stores, or could be considered, like Bitcoin, a store of value. So each week I track those as well. We're going to get into that in a second. What is the value of a spot ETF? A couple things. That means that for every share that I buy, or you buy, of that ETF, they have to have a corresponding amount of Bitcoin. So you're not holding that Bitcoin in a wallet, a self-custody wallet, so to speak. They're holding it on your behalf, just like a spot gold fund would have to hold the gold that you're purchasing. So you might think, well, I don't actually hold it, that's not great, but what's the value of it? Well, imagine this. Imagine if you have a lot of wealthy investors, and they have a financial planner. You don't even have to be that wealthy to use a financial planner that invests the money for you. Maybe it's your retirement funds or whatever it may be. And you say to them, I want you to buy me some Bitcoin. I want to have maybe 1% exposure to Bitcoin in my portfolio. Well, what are they going to do? Are they going to go open an account on an exchange like Coinbase and create maybe a wallet and then buy it, move money from your account into Coinbase, buy some Bitcoin, and maybe you say, well, I want it to be, self-custody. So they move it to a wallet. We've got the passphrase and everything, and it's within your custody. And they're going to do that for 10 clients, 100 clients, 1,000 clients. No way. They're not going to take on that liability of having to open all these different wallets and keep all these passphrases and all that. They're going to say, no, thank you. ETFs come along. What do they do? Well, whether it be Schwab or Fidelity or whoever they use, where your money's sitting, they just buy some shares of an ETF. Because that ETF has direct exposure to the amount of Bitcoin to match the amount of money you just invested. Look how easy that is. Now can the financial advisor give 1% exposure to all their clients to something like Bitcoin or coming up Ethereum through an ETF? Yeah, they can do it quite easily. Click, buy, done. I don't want it anymore. Click, buy, sold. Easy. So it's a big deal, particularly that this is happening in Hong Kong, because the Asian market now will have easy and quick exposure to Bitcoin and Ethereum, just meaning potentially more money moving into this ecosystem. But then again, why are they doing it? One, do they think it's the future of some of the technology? Maybe. Do they think it's a store of value? It seems like that could be the case. So I'm not giving you financial advice. This is not financial advice. I'm just showing you what I do. So let's get into what we do every Friday, which is back in February, I said, hey, if you've got a chunk of savings, have your emergency fund, have your next couple months, whatever makes you comfortable in cash, but then you might want to start rotating things. If you have it in a checking account, probably not beating inflation. CDs, treasuries, close to beating inflation, maybe not. But then things like gold and silver for the long term, and Bitcoin and Ethereum, and personally other crypto. So let's take a look at the prices. I'm going to throw up here on board we've got, and I just use this one site because it's really easy to take a look at the prices of 4 items on there. Gold, $23.44 currently. You can see here when we started tracking in February, it was around 2,000. So that's like a 10 to 20% jump. Silver, it's at 27. It was at 23. There's another nice jump, $5 on 20. We've got Bitcoin currently at 64,000. It was at 43,000. It's like a 50% jump. Ethereum, 31.32, and it was 22.99. So there again, you have about a 50% jump. Now, I'm not saying that these things are going to go up 50% all the time. It's great that they've gone up so much, but I've been buying things like gold and silver and crypto for quite a while. Just been tracking it on this show since February. I dollar cost average in, because over time, I believe that's more valuable than my dollars just sitting in an account, gaining 0.25 or 1 or 2 or 3% interest. So that is the store of value. I'm putting money in assets that I believe over the long term will be worth a lot more. If you look at some of my past episodes, you'll see people like Kathy Wood and Michael Saylor talking about the devaluing of currency, and the fact that I love the line Saylor had about with dollars, you're just getting poor over time. Other currencies, you're getting poor faster. With a dollar, you're just getting poor slower, but it's losing value. All right, now the other thing we take a look at is the 10-year Treasury. The 10-year Treasury is a good barometer for where it looks like rates are going in terms of borrowing money. Personal loans, credit cards, mortgages, whatever it may be. Not directly tied to it. It doesn't directly influence it, but it is correlated. So when you see these rates going up, the 10-year Treasury going up, it looks like borrowing costs across the board typically will go up. And usually it also means when borrowing costs go up, the economy might slow down. You've seen lots of layoffs and those sort of things. So I appreciate you watching. I put out a show now 3 times a week on various items regarding getting out of debt and trying to save money and being smart about buying assets, things that can create income for you. And then when you're storing your savings, looking at potential things like we're doing now, gold, silver, Bitcoin, Ethereum. So thanks for watching. And as always, I hope you're like me. You're trying to become financially free